Welcome back to Trading Day. Well, as the ongoing drought ravages the nation in what's been a major hit for the farming community, what has the impact been on the market and for investors? Well, for more insights, Alistair Walsh, Director of Water Assets at Duxton Water, joins me live at the desk this afternoon. Alistair, welcome into the show. It's a pleasure to have you on board with us. And look, we obviously know that the drought conditions really have taken a hit to the whole farming community, as we just mentioned there. But let's start off with Duxton in particular. It's a listed water rights business in the country, and it basically acts really as a proxy to the whole agricultural industry. Perhaps you can tell us a little bit more about the company and how Duxton actually facilitates investing in water.
Yeah, certainly. No, we're the only pure water exposure, ultimately, particularly from a retail perspective, that there is out there. We're invested in, if you like, the accounting of water. So we've had a separation of land and water rights within Australia because we've had a variable climate, and we've had to look at how we manage our water resources differently. Ultimately, we give investors an opportunity to get that direct exposure into water rights, and with the utilisation of those water rights and providing water supply solutions back into ag in a capital light way.
And now, is Duxton the first company to offer retail exposure to water? Are there any other groups that offer the same kind of exposure?
Yeah, we've looked globally, and we actually can't find an equivalent exposure globally. We've obviously got a slightly different treatment of our natural resource here in Australia, but certainly there are others out there looking for exposure to water, but generally that's in the form of utility exposure, and in this case. The actual asset class, or just direct exposure to the water rights themselves, really gives you a real asset exposure without any of the infrastructure or depreciation impacts. So it's ultimately straight to the source, as it were.
Yeah, it's fascinating. It almost seems counterintuitive because you think about investing in water when we're in a drought situation. Yeah. The first thing is that you think about lack of water. You'd think that it would be a tough investment and wouldn't be able to make much money from it. Yeah. But how should we be thinking of it as an investment or as an asset class?
Look, we certainly see ourselves as a proxy to ag, because ultimately the investment that we're in the southern Murray-Darling system is exposed to a number of different industries, and so really we act as a proxy to those industries, and certainly our water moves to highest and best value within that. Ultimately, we see ourselves in these sorts of conditions as potentially a hedge against an existing ag exposure, because certainly we have a portfolio of water rights, higher security rights, certainly weighted towards higher security rights, which even in these conditions will perform well. Ultimately, what we see within a transparent, free water market is the fact that when there is less water, ultimately prices are higher, and so there's a natural hedge within the market, within the asset class, around water availability versus price, and that's reflected in our capacity to earn revenue.
So ultimately, a really great way of sort of protecting and diversifying a portfolio, as you point out. Yep. What are some of the other benefits? I guess highly tradable. No depreciation.
Yeah, correct. So from an asset perspective, it's an asset class that potentially is uncorrelated to broader financial markets. Ag in itself generally performs well in a higher inflation or higher interest rate period, and certainly ag in Australia, we're seeing significant growth and significant capital investment at the moment. Really, we're kind of providing a proxy, or we are providing a proxy exposure to that. So that's the strength in nut production, the strength in citrus and viticulture production, which we're seeing with some of the free trade agreement exposure we're getting into China.
Sure. I guess my next question sort of comes back to my earlier point around thinking about water in a kind of drought situation that we're in. Why do you think that water investment matters more so in times of drought?
Look, we've certainly seen a maturity of the way that farmers look at their water. The ability for groups like ourselves to come in and have that exposure, basically not be looking to utilise the water ourselves, but actually provide water supply solutions back into ag. Particularly our ability to provide more sophisticated products back, which enables agriculture to really risk manage some of their water supply going forward. So, we're not using the rights. We have an ability to actually provide forward pricing or forward contracts of available water. And that gives farmers the ability to actually manage some of their allocation risk or their drought and climatic risk within their production. So it's an important maturity of the water market, and certainly, we need the investment space to do that.
Sure. So allowing farmers to lock down sort of full water security, essentially.
Yeah, correct.
Yeah. In terms of the outlook. What do you think the future looks like? Well, not only firstly for water, I guess, and then the outlook for Duxton itself.
Yeah, not a problem. So, look, ultimately, we have a tailwind really around the movement of agriculture to highest and best use. So we're seeing certainly, as I mentioned before, nut production, viticulture, and citrus production really go through a strengthening, a reinvestment at the moment. We're also seeing farmers become significantly more efficient with the way that they're utilising water. And ultimately, within Australia, our restriction is not land. We have plenty of land that we can continue to develop as we become more efficient. Both those two factors, that high value and efficiency, is ultimately going to drive the value within Duxton.
And the ability of you to grow your portfolio is only increasing as well.
Look, it is. We've got a capital, ultimately an industry within ag that is capital hungry. They're looking to expand and develop. In many cases, historically, the water component or water assets have sat on their balance sheet, have made up potentially up to half their capital exposure. Now, for a farmer, they're better to have, or certainly they see their ability to actually get want their capital to be working in their production and land assets. We can actually take those water assets off their hands, but provide the long-term security they need back in a capital light way to help further develop their land and business assets.
All right, fantastic. Look, Alistair, such a fascinating topic, and
Thanks.
Wonderful to hear about how you can kind of diversify and deal with some of this market volatility that we're seeing. So thank you so much for joining us.
Thanks for having me.